Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I am joined by my equity buddy, Ren. How are you going?
I am good, Bryce. I'm very good.
That's good.
Look, every episode is special. It holds a special place in my heart. But this episode is up there because...
We haven't done it yet.
You have turned 30.
I have turned 30,
We
yes.
are officially in different decades of life.
Yes.
You don't look
respect your elders.
You don't look a day over 29.
Thank you. Oldest I've ever been.
And the oldest you will ever be.
Yes.
No, that's not right. The youngest you will ever
The
be.
youngest I'll ever be, yes.
Happy birthday, bro.
Thank you.
Anything exciting happen?
I prepared for this episode.
Really? There you go. That's exciting. Well, look, in honor of your 30th birthday, we've got a very special episode where I get to sit back and relax. And if people are watching us on YouTube, they'll really see me lean back in this episode, really take a load off, because you have come in hot with 30 stocks for your 30th birthday to hold for 30 years.
No.
Is that not the concept?
No.
Well, now it is.
Jeez, wow.
What's the concept?
No, the concept is 30 investments for my 30th in 30 minutes.
Oh, yeah? Yeah.
And it's a wrap of some of our favorite companies and ideas that we've come across and discussed and have been thinking about over the last 5 years of Equity Mates.
Okay. I like it.
Yeah, it's a bit of a trip down memory lane in some instances, and I'm going to try and do my best to bring to light 30 investment opportunities in 30 minutes.
Now,
for my 30th.
Two things before we start. Obviously, this is not financial advice.
Yes.
This is Bryce taking us on a trip down memory lane as he gets older and starts reminiscing more, thinking about the good old days.
Another caveat, some of these investment opportunities have had more research dedicated to them than others.
Hey, look, it's just like the 30 years you've been alive. Some years you put a little bit more effort in than others.
Exactly.
And the second caveat is I have no idea what you've got in store. You
don't?
Literally, on our planning sheet, you just have our introduction.
Yes.
So I'm going to be surprised.
Me too.
Oh, wow. I would love it if you just read down the top 30 of the ASX 200. CBA, CSL,
That would be classic.
Wesfarmers, Woolworths, NAB.
I'm not going to do that, but it might be close. So before we get stuck into that, Ren, the smallest bit of housekeeping, and this is some really exciting housekeeping, so stay tuned in for this one. We have partnered with the ASX. We are their official media partner for the ASX Investor Days that have already been in some major capital cities, but the good news is that there is one coming up in Sydney on May the 22nd, Saturday, May the 22nd at the International Convention Centre. It's a full day where we're going to have plenty of experts organised by the ASX coming in and talking everything from portfolio construction, how to invest in global markets, you name it, they're going to be discussing it. And we're going to be there filming the day, running around, interviewing experts during lunch. We're going to have a bit of a stall there with some merch and bits and pieces. And then we'll be bringing the day to life through the podcast in June. Great news. Tickets are cheap as they are. However, we can make them even cheaper. If you go to the website, ASX Investor Day website, just Google it. Using the code ID50, you'll get 50% off your tickets. So come and join us if you didn't get a chance to come to the live show. Alec and I will be there. And
I feel like you buried the lead there.
Yeah, you can come and hang out. We will be there all day. We'd love to hang out and talk stocks and watch some of the presentations. So Google ASX Investor Day. ID50 is the code to get 50% off. I think that brings the tickets to about $25 or something. It's pretty cheap.
Do your own research on that, though.
Yeah, I think.
And who wouldn't pay $25 to see Bryce Lesky in the flesh and give him some feedback on this 30 minutes that he's about to rip through?
Oh my God.
So The rules are as follows. We're not doing a minute per idea. We're just going to give you the 30 minutes. I'm going to try and keep my interjections and waffling to a minimum. No guarantee, though.
Yeah, that's fine.
And I'll be timing.
That is fine. Before we start the timer, I just want to say that we will be having a Specky McGee as part of this.
Does that count as the 30?
That counts as the 30, but not in the 30 minutes because he's probably got some song he wants to play.
Yeah. Specky really loves the limelight.
Exactly.
But yeah, that is good. I like a birthday Specky.
We've got a Specky McGee. We've got a crypto corner as well from Bamboo. Well, it won't be from Bamboo, but brought to you by Bamboo. And we've also asked some experts the questions, what stock would you hold for the next 30 years? We have 4 experts from the Equity Mates community who have answered that question.
So you've really just outsourced a lot of
those
this.
4 won't be included in the 30.
Jeez, this could be a long episode.
I know. Schweppes.
All right, I am ready to relinquish any effort. Are you ready to carry this episode?
I hope so.
Well, tell me when to start the timer.
Let's do it. So 30 stocks in 30 minutes. I'm going to start with geographies, Ren. Okay. Countries. So we're going to kick off with India. Look, you can't go past Reliance Industries, $90 billion in revenue in 2020. Indian multinational conglomerate across energy, petrochemicals, textiles, natural resources, retail, telecommunications, you name it. However, I feel a company that doesn't get enough attention is Infosys. It is a global leader in IT and is now rivaling some of the biggest firms in terms of consulting and providing business services. So Infosys, massive Indian company. Next, Indonesia. A lot of listed companies in Indonesia, your traditional boring banks, airlines, retail, etc. But the new economy companies are coming through, and it's not listed, but it is coming with an IPO. We've spoken about it before. It's Gojek.
Nice.
Can't go past Gojek. It is merging with Tokopedia. Again, a huge startup over in Indo.
Does Tokopedia count as the 4th?
Nope.
Okay, nice. You're a minute down and you're 3 stocks in. I'm liking the pace that we're setting here.
Gojek, though, is likely to go public after they merge with Tokopedia in 2022 or 2023, but keep your eye open for a SPAC. They might be going public with a SPAC. So Indonesia, if you've listened to some of our episodes most recently, provides an awesome opportunity. So India, Indonesia, keep your eyes open. China. Honorable mention goes to Baidu.
Not included?
Not included. Okay. Baidu is the Google of China, specializing in internet services and products, and also has a bit of a play in artificial intelligence. It is listed. Check it out if you're keen on Baidu. Honorable mention also goes to Alibaba, the Amazon of China. However, look, you can't go past Tencent.
Nice.
It's just an absolute behemoth of a stock. And for many reasons, it is my stock pick for China. I know it's your stock pick of the year. So it's been... I actually haven't checked in on that, but we should see where things are at.
Mate, you're 2 minutes in. Don't get derailed here.
2 minutes in. Number 4, Australia. If it were public, I'd be very interested in investing in Canva.
Same.
I think it's an amazing company, great product. We use it. That's good enough for me. However, this is not a company that's listed in Australia, but it is an Australian company that we haven't really spoken a lot about and given enough credit to, and that's Atlassian.
Okay. Australian company listed in the US.
Listed in the US, Australian company. It's just done incredibly well. It's an Australian software company. I've used their software a lot and they nail it. Yeah. I think it's...
You do love that, like agile working, what is it? Scrum Master.
Scrum Mastering,
all that stuff.
Yeah. I think their software is great. And their stock just continues to grind. Like if you have a look at where it is from the IPO, particularly obviously the last few years, but it just continues to grind. So
and Mark Cannon-Brookes, come on the show.
Yeah, come on the show. Shout out to Atlassian. Yeah, you can't go past it. And I don't think enough credit is given here in Australia.
Yeah, I agree. Support Aussie entrepreneurs.
Exactly. Number 5, America. There are obviously way too many to try and mention here, and a few will come up later. But I've gone with Cisco.
Wow, that's
Cisco.
interesting.
Yeah, Cisco is the worldwide leader in IT and networking. And I think if you're thinking about, cybersecurity and getting access into that space, they're a really big player in it. And if you're looking to get some concentration, think about Cisco.
All I know about Cisco is that the desk phones when I worked at Coles were like Cisco. Like
That's all we need to know.
It feels very old technology for me.
Yeah, I mean, it's an old company.
Yeah. Anyway, I don't want to derail this stock.
Old company, but they're, how much time we got? Plenty of time.
You're up to 6 stocks and you're 4 minutes in. Perfect.
Cisco. Look, as I said, America provides plenty of opportunities, and I'm going to talk about some later, but I don't think enough attention is given to Cisco, so I've given it some airtime. Scandinavia.
Jeez, you're ripping through the geographies quickly.
Scandinavia, plenty of amazing companies. Novo Nordisk is the one that I've gone with. It's the world's largest company within diabetes treatment and also leading the market for treatment of obesity. Huge company over in Scandinavia. And I think that, given both of these, obesity and diabetes sort of go a bit hand in hand, and they're really the world's leader in this space. Incredible revenue, incredible size. You might want to find if you can get access to it. I can't remember if it's listed in Denmark or if it's on the American Stock Exchange, but whatever.
You don't have time to ponder these things.
I don't. So check that out. Novo Nordisk, Danish company. Europe, honorable mention to Diageo. We had our live show. I think the moat that it's got in terms of the brands that it holds is pretty incredible. However, I asked myself if there's one company that I would like to own going forward in Europe, and that is the Volkswagen Group. Okay. They are the largest manufacturer of cars in the world. They have brands like Porsche, Audi, Volkswagen, you name it. They've got an incredible array of brands. But what I like most is that they are now taking on Tesla at their own game, going electric, and they really have the scale to do it. We've spoken about this a number of times, and they're now sort of disrupting themselves. They said, let's take on Tesla and beat them at their own game. Go Volkswagen. South America. So I've gone two here. The first is a company called Companhia Brasileira de Distribuição.
Okay, nice.
Otherwise known as GPA. It's one of the largest retail companies in Latin America by revenue and also one of the largest online retailers in Brazil. I love my retail.
I was going to say, I'm sensing two retailers coming out of Latin America, and it is true to form for the retailers.
Yes. They're engaged in a number of businesses, retailing food, general merch, electronic goods, home appliances, you name it. Pretty big behemoth over in Brazil and Latin America. Second, Mercado Libre, Argentine company. They operate online marketplaces and are a massive player in e-commerce as well. So check both of those out if you'd like some South American exposure. Southeast Asia, Ren.
Okay. The around the world trip has taken a roundabout way. We've gone Australia, and then we're coming back to Southeast Asia. But hey, you're the troop leader here.
Southeast Asia, again, not public, but it will be hopefully soon via a SPAC, and that is Grab. We've spoken about it on AusBiz. Singapore-based, involved in transport, food delivery, mobile payments. Again, great big startup that is, in terms of its size SPAC, it's going public via SPAC. Biggest ever, 52 billion target. Huge.
Not bad.
So that sort of closes out infrastructure.
You missed a key geography there.
Where?
Africa.
I did.
Yeah.
Yeah. Do you have one for Africa?
Is it Juma, the super app of Africa?
We'll take it.
Okay. Give it an honorable mention to not disrupt you.
So now I want to go into some, sectors. So we're going to move into infrastructure, and I really like Transurban here in Australia. They're a road operator, and they manage and develop, urban toll roads and networks within Australia, Canada, and the US. If you can think about a motorway here in Sydney, Melbourne, or Brisbane, it's highly likely that it is operated by Transurban.
Yep.
What I like about it is that most people are driving more post-COVID now. Public transport is really suffering. A lot of people are buying secondhand cars and making that choice. And also Australia is opening up, and we're seeing more cars on the road. So for those reasons, I'm taking my infrastructure play as Transurban. Financials, I can't go past Magellan Financial Group. It's not what they're doing with their funds that really has me excited, although that, pretty incredible with Hamish and Chris Weldon at the helm, but it's what they're doing with their cash flow and their balance sheet and actually investing in the business that I really like. They're taking a bit of a venture capital investment bank approach and taking positions in Guzman y Gomez, for example.
Like a holding company approach, like the Berkshire, the analogy is thrown out a lot, but like there's a world in which that's what they turn their balance sheet into.
Yeah. It's definitely a story to watch to see how they take this incredible cash flow and invest within their own business. Media, Ren, cannot go past
Equity Mates.
Equity Mates, of course, cannot go past Spotify. I've got two media companies. Spotify, it has taken a pretty big hit. I think it's down 30 or 35% from when I bought it. I don't know where it's down from the top, but it's taken a bit of a hit, as a lot of stocks have. It's the king or the queen of audio. I think we're just at the beginning of where audio can go. So does Spotify, and they're placed right in the middle of it. So I've got to back Spotify for the long term. Again, a stock that you've spoken about, Ren, the New York Times. It is the comeback story of the last decade. They were down and out facing decline in print media, and they've realized that their value was in their stories and their reporting and not the medium itself. And so they've transitioned to a digital media business.
Now, I'm going to interrupt you here. By my count, that's 15 stocks. I did get a little bit lost with some of those honorable mentions, but, you know, if we ever want to be able to buy some of these stocks, we do need to keep the lights on and pay the bills. So before we hear the next 15, we're going to take a quick break and hear from our sponsors. All right, Bryce, we are officially 10 minutes and 21 seconds in, 15 stocks down. I don't know how many honorable mentions.
Well, I'm up to 13. Plus some honorable mentions.
Do we do a count back? How many can I remember? All
anyway,
right,
keep going.
No, give us two. If I'm right, you've given us two bonus ones at the end. That's great. If you're right, you're probably right, given you've got the notes.
And the best are yet to come.
Wow. All right. Well, Equity Mates, I'm not going to talk any longer. Bryce Lesky, the clock is starting now.
Tech is the next sector. Where do you turn to for tech? I've tried to choose one that we have spoken about, and that is the Trade Desk, Ren. It is a titan in the industry. It is a leader in the digital programmatic advertising. So it's all about understanding who you're advertising to. They help with the pricing of it all, and then they get the ads in. And we know the importance of programmatic advertising, a stock that's done phenomenally well.
You're right. This is a little bit nostalgic.
Yes.
I'm remembering the first time we spoke to Tobias Bucks and he told us about this company.
Exactly, Trade Desk. So the next sector, one of my favorites, is retail. I am still backing in.
And here's the next 20 stocks.
I'm still backing in three companies that we've spoken about, and these are honorable mentions. Baby Bunting, yes, tick. City Chic, yes, tick. And also JB Hi-Fi, tick, the stock that keeps on giving.
They're all honorable mentions.
They're honorable mentions because
What about Woolies? Does that get an honorable mention?
I thought about Woolies and I do like it, but it gets an honorable mention.
There we go.
But I'm looking overseas. And I like Home Depot. We've spoken about it. Business is supported by some strong tailwinds. It is actually taking a bit of a price hit at the moment. Maybe an opportunity for me to get in. But look, love it. Excellent management, I think, given their incredible return on invested capital. They do face a few challenges in terms of their revenue mix, but I think the tailwinds for Home Depot are great. That's my retail pick. Right. So this is. I'm going to quickly go through 5 stocks that are the biggest in the world and the leaders that you may never have heard of. And this is one section. So this is counted as one stock.
Jeez, you've really overdone it here.
This is very quick. At core, they're the biggest producer and leader of electrical and plastic conduit. I don't know if you remember talking about that, Ren. Generac, they're the leading producer of generators and local electricity production. Hexcel, they are one of the only manufacturers of aerospace-grade carbon fiber in the world, operating in a duopoly against a Japanese company. Again, the largest. Copart, the largest provider in the US of junkyard services.
Yeah.
Do you remember that one?
I do remember that, and it feels like you've trolled
Osbiz.
Nick
Cregan.
Nick Cregan's,
yeah.
Osbiz episode. Shout out to Nick Cregan.
And Temenos, they're listed in Switzerland, and they dominate the European market for banking software. So I'm sure a lot of those companies people have never heard of, but they're all the biggest in their specialized field.
Nice. I love a big company in a niche.
Yeah. So check those out and go and have a look at our Ausbiz channel if you want more information on them. Additionally, Steelcase is the world's largest manufacturer of office furniture, would you believe? Check it out.
I would believe it.
Great.
I believe everything you're telling me.
Number 16, the community favorite company. I can't go past buy now, pay later, but it is not Afterpay, it is Zip.
Nice.
We interviewed Larry. Seems like there's a lot of growth opportunity, and depending on how you look at it, it could be undervalued compared to its peers, or it could be valued and a lot of...
and its peers are incredibly
overvalued. You decide. The company that I would have for the next 30 years, Macquarie Bank.
Nice.
Yeah.
The Millionaire Factory.
The Millionaire Factory, they just announced a $3 billion profit. This company knows how to make money. They just keep making money. They hire the smartest people. They pay a great dividend, and they just keep churning out great investing returns.
Who knew if you trawled Australia for the smartest people and the most ambitious people and told them to just make as much money as possible, that you would make a lot of money?
Who would have thought you would? And look, I think over the next 30 years, they will be able to adapt. They've proven that they can do it through market fluctuations. And I think that they are going to keep attracting talent and great management and developing this talent and management.
It's an incredible, like, we talk about moats in a number of cases. Their people moat is pretty incredible.
Unbelievable.
Like every high performing uni student is like Macquarie Bank is up there for them.
Yes.
That's a tough moat to break.
Yeah, they're incredibly good. So that is my company for the next 30 years.
Wow.
The,
I like it.
the company that
FYI, you've just hit 15 minutes.
Oh, great. I can lean back a bit. The company you just cannot ignore, Amazon. I think you can't ignore it. Has fingers in many pies. It just keeps churning out incredibly good quarterly numbers. Over 100 billion in revenue last quarter. The big question is what happens when Bezos goes? Will the company change? Do they need him as a driving force at the top? We know his management style is pretty direct, and he's not one to shy away from taking big risks and bets. I'm interested to see how the new CEO fits into this.
Apparently, his management style is pretty direct as well.
Oh, interesting. Yeah. Well, maybe that's what Amazon needs.
More of the same.
Yeah, more of the same. But look, you know, it's one of those companies that every time they report, you kind of think, how do they keep doing this? And they just keep on churning. So
you think, how do they keep doing this? And then you're like, oh, I forgot to buy something, so I'll go to Amazon and buy it. And you're like, oh, that's how they keep doing it. And then you build a website on web services. That's how they keep doing it.
So the company that cannot be ignored, Amazon. This is just a quick one. E-commerce, Shopify, lock and load. Can't go past it. So crypto, I'm not going to give a cryptocurrency, but if you want to play in the picks and shovels and get behind the momentum that crypto has at the moment, you've got to go Coinbase, 60 billion market cap. Interestingly, they operate their business model and their employee model on a remote first, and they actually lack a official physical headquarters. So they don't mind
decentralized workplace.
But this is a picks and shovels play. They are incredibly profitable and have huge cash flow. So check out Coinbase if you want to, take advantage of the incredible momentum that crypto has at the moment, but be aware that it might turn south if you're in cryptocurrency. An internal disruptor, i.e. a company that has disrupted itself and succeeded, is Disney. They traditionally had forms of distribution for all their movies and whatnot through, cable TV, the traditional movie format, but they have since pivoted to digital streaming and now have over 100 million users on their Disney Plus platform and are able to distribute their content to homes around the world, which is a pretty incredible story. And I think, look at what has happened during COVID. Again, they've had their Disney Plus, which has supported them. And should their offline businesses come back to life, give, what are they called? This theme parks and that, then I think they're going to be in a pretty strong position. Yeah.
Disney and the New York Times for me are two businesses that understood what their value proposition was and what their distribution formats were. Like, New York Times realized they were in the news business, not the newspaper business. And Disney realized they were in the content business, not the movie business.
Yeah. So incredible story. If you want an income stock, Washington H. Soul Pattinson and Brickworks, both of which who have consistently paid a dividend for over 45 years. And both CEOs and have come on and said that there's no reason for them to stop doing that. So if you want an income stock, they're the ones. Esports, honorable mention, goes to Tencent. They already got on
the list, didn't they?
Yeah, but now they've got an honorable mention and a stock. Honorable mention. Yeah. But I like Activision Blizzard, owners of some of the biggest games in the world, Call of Duty, etc. And there's no doubt that the esports industry is providing plenty of growth opportunity. We did a segment on AusBiz on esports and fascinating, and I think we're going to try and do a live show around it at some point. So keep your ears peeled for that. Healthcare, Just a quick one, CRISPR.
It wouldn't be a Bryce Lesky episode without a Leskyism. Isn't it
What did I
eyes
say?
peeled? Not
Did I say ears peeled?
Yeah.
Healthcare, CRISPR, and also, I don't know if you remember speaking to Michael Frazis right at the end. We asked him what was the company that we should be keeping our eye on, and he mentioned Dermatech. They're doing DNA testing for melanoma, but just by putting a little piece of tape on your arm and ripping it off, and you can test if that's cancerous or not, rather than having to get it cut out of your skin. So pretty innovative, one to watch over the next few years, according to Michael Frazis. Our 2 EM stocks of the year, purely just a reminder, I've gone with Roblox, you've gone with Tencent.
Jeez, Tencent getting a third mention in this episode.
Third mention. Last I looked, I think we were neck and neck.
Yeah.
I haven't seen. I'm sure Roblox has taken a bit of a hit given all of the tech is done. But while I keep going, you can look up that. A company that I think has incredible market dominance, and I don't see it being overtaken anytime soon, is Airbnb. Love it. There is no better example of a company that absolutely dominates its industry than Airbnb. I think when's the last time we booked a hotel? I can't remember. Airbnb is now an actual, well, let's just get an Airbnb. Like it's really solidified itself in its market. So nice one, Airbnb. I am a shareholder. Are you? Yeah, nice. If we go ETFs, short term, I'm actually thinking short the NASDAQ.
Fair.
Yeah. I don't know how short term, but I feel like now's a chance to put a bit of a defensive play and put on a short for the NASDAQ. However, if you're thinking long term, we love moats here at Equity Mates. The VanEck Wide Moat ETF is following the Morningstar Moat, I guess, analysis index, and provides access to a bunch of companies that Morningstar deem to have wide moats, and we all know that moats are strong competitive advantages within their field. So an interesting ETF. Another one that we've recently come across is the ETF Securities FANG Plus. The reason I like this, it's a concentrated portfolio of 10 tech stocks that are equally weighted. And we know the value of equal weighting is that it gives every stock an equal opportunity to shine. We will have Specky McGee coming on, but I want to close out, Ren, with a crypto corner.
Wait, how many are you up to? Have you done 30?
This is the 29th, and then I've got the 4 expert stocks.
Nice.
So crypto corner. This is just a little bit of news, and this is brought to you by Bamboo. They are a micro-investing app that allows you to invest in digital assets such as Ethereum and...
I'm very confused about the structure of this, but okay, keep going.
Whatever. Digital assets.
We both use Bamboo, and we have a promo code, $10 of free Bitcoin. Put in Equity Mates after you sign up. Go to the settings, enter a promo code. We've told Bamboo that it's confusing. Most people put a promo code when you sign up. So we've heard the feedback. Don't give it to us again. We passed it on. But that $10 of free Bitcoin is available. It's like Raise for crypto.
Yeah, we both use it. It's a good app.
Anyway.
There is a race for Bitcoin ETF here in Australia between
VanEck and BetaShares.
VanEck and BetaShares. That's really the update. Keep your eyes peeled. It's going to be interesting to see.
Is this part of the 30?
No. It's going to be interesting to see who comes out on top. I don't think I'd be doing an ETF for Bitcoin, though. I wouldn't be investing in it, I don't think.
No.
Yeah.
It's quite easy to just invest in Bitcoin. But the thing is, they're not making it for you and I who are used to online brokerages and investing our own money. They're doing it for like institutions and funds that have mandates that they can only invest in the share market.
Yes.
And so now, like that's why like Tesla and AMD and whatever Michael Saylor's company is, like that, they were getting premiums because funds that wanted Bitcoin exposure, the only way they could do it because of their mandates was to buy companies that held Bitcoin. Square as well held Bitcoin. So Bitcoin ETFs aren't really for us per se because we're happy to just buy Bitcoin. But, you know, it makes sense. Like if you're going to have some of the stupid ETFs in the US, there's an ETF for everything over there.
Yeah.
Bitcoin makes sense. But yeah, I don't know. It feels, I reckon the ASIC will approve it. just as we enter the next crypto winter.
Yeah. So, Ren, to close out 4 stocks, this will definitely take it over 30, and I have about 6 minutes left. And these stocks are from our experts. I asked, what would you hold for the next 30 years? Mine is Macquarie. I'm going to ask you at the end of this, Ren. So take some time to think about it. No pressure. So Mary Manning from Elliston Capital, I asked, what is the stock that you will hold for the next 30 years? She said, this is an easy one for me. I would say NIO, the Tesla of China. In a nutshell, the thesis is that China recently committed to China Net Zero, a plan for China to be carbon neutral by 2060 and have peak emissions by 2030. To get there, they're going to have to radically shift the energy mix, and electric vehicles will have to play a big role in that. NIO is the largest electric vehicle company in China with a market cap of 60 billion, top line growth consistently of greater than 50%, and will be profitable by 2023. Total addressable market for EVs or electric vehicles in China is huge, so it can sustain this level of growth for many years. The stock has fallen over 50% since Feb 21, so this is a decent entry point.
Okay, NIO, interesting.
NIO for Mary Manning. Then I asked Andrew Brown from East 72 Holdings, and he said, well, to match the brief, you want a company that will change with the changing time and into the future. You want management that has their money committed in it and is very shareholder friendly, but also has a genuine long-term horizon and is a global thinker. So he says everyone else will say Alphabet for obvious reasons, and I wouldn't deny that.
He's just taken mine, but okay.
But just to be different, I will go with Exor, knowing that the CEO, John Elkann, is only 45 years old, so will be about to retire at the end of the 30 years. It will look nothing like it does in 30 years' time, and we all know about Exor, given Andrew's appearance on AusBiz, so check out our...
When you say we all know about Exor, I'm sure there's plenty of people that don't, including me. I had to just Google it, but just Google it.
Yeah, just Google it.
It's traded in Italy, EXOR.
It's one of the billionaire ones, I'm pretty sure.
Yeah. Stock ticker EXO, company name EXOR.
Emma Fisher from Airlie Funds Management, I asked her, and she said hers would be PWR Holdings. They're a manufacturer based on the Gold Coast in Queensland, and they do cooling systems for every Formula One racing team. If you've seen the Netflix show Drive to Survive, you'd know you have to be pretty bloody good at what you do to supply Formula One. So they are the best in the world at high-end cooling systems for cars. Why she would pick it for the next 30 years is that they are big winners from the shift to electric vehicles. When you use your laptop a lot, it gets super hot. It's the same with electric vehicles. They require more cooling systems per car, and PWR are working on high-end cooling systems for EVs. And as the market shifts that way, they're going to be the big winners. Everyone wants to play the electric vehicle thematic through Tesla, but she thinks that you want to invest in those selling shovels in a gold rush, as they say.
Nice. I love how we've used the picks and shovels analogy twice here today.
And Ren, to close out, I asked Chris Weldon from Magellan, what would he pick? And in one word, he said Microsoft.
Wow. But that's all he said when he responded.
Well, he said, and then if you want more, give me a buzz, but I ran out of time and didn't give him a buzz.
I like that.
But he said...
Shout out to Chris. That's a power move.
Yeah, in one word, Microsoft for his stock for the next 30 years. So that brings me in at 28 minutes, Ren.
Including with some interruptions from me.
Including with some interruptions from you. I know there was a lot to absorb there, so...
This can be an episode that people go back and listen to multiple times.
Hopefully, yes. Hopefully.
Get our downloads up.
Get your downloads up. If anything, I hope it was a nice walk down memory lane from a lot of the stocks that we've been speaking about over the last 5 years, a lot of stocks that I've enjoyed doing a bit of research on that do make up some of my portfolio. But to close it out, a statement or a concept that I've been pondering recently, Ren.
I love this.
And it is that I saw this the other day, and it's really made me think about how I build my portfolio over the next 30 years. You concentrate to create wealth, then diversify to protect wealth. And for me, that is an interesting concept to ponder given the stage of investing that we're at. And not spreading myself too thin because there's too many exciting opportunities.
Yeah. That is very fair.
So before we jump into Specky McGee and hear what his take is on the next 30 years, we're going to take a quick break to hear from our sponsors. All right, Ren, it is time to dial in Specky. And then we'll close out the episode with your thoughts on a stock for the next 30 years, a bit of chat about what's going on with inflation at the moment, and then stock of the year update. So Specky's just messaged through, yeah, let's rock. So let's dial him in.
200,000 shares Blue Star at 19.5. Can you position it in one of your equity funds? Listen, Blue Horseshoe loves Blue Star Airlines.
Hello. You've reached the Specky hotline.
Here he is.
Jeez, he's back.
Hey, boys.
Specky, now this is a special Specky McGee episode. Well, in fact, this whole episode is quite special because we're celebrating Bryce's 30th birthday. So I hope you're going to bring something hot for us today.
Okay, all right. Well, how's the birthday celebration been going so far?
Well, now that you're on the line, it couldn't be better. It couldn't be better.
Fantastic. Okay.
Now,
have you been talking about individual stocks or?
yes, I've done about 35 stocks in 30 minutes
For his 30th birthday.
For the 30th birthday, and I thought it would be a missed opportunity if we didn't hear from Specky and his thoughts on A, what's going on in Specky land, but B, rumors have it that you've also been having a bit of success in the crypto space, so very keen to hear what is going on there. So should we fire away?
Yeah, let's go for it. Look, guys, the market's been a bit rocky right now in terms of ASX stocks, which you may have noticed. And there seems to be a correlation between when you call me and how the market's doing. I remember last time I was on, it was all red. So I think you need to avoid calling me if you want to see some gains.
It is red.
So there's been a bit of success across the Specky McGee desk lately.
Nice.
Well, remember when I came on last time, I was trying to find the most ridiculously named cryptocurrency, and it ended up with Banano. So that was recorded on the 29th of March. But then on the 14th of March, there was something called Sea Rocket, which was launched.
I think you can say it.
Come Rocket.
Yeah, you can say it. Yeah.
Come on.
It's the name of an official investable asset.
No one's going to know what Sea Rocket is.
Well, I didn't know the explicit ratings and that sort of thing. But if that's all good to use that term,
Yes. All good.
Let's roll with it. So yeah, it was crazy market movement, crazy price activity. It's almost as if there was a whale involved in the price movements.
Were you a whale?
No. I wasn't a whale, but what do you reckon?
What do you mean? What do I reckon?
He's trying to tee you up for a joke here. And you are not taking that pitch. No, I'm not. The sperm whale.
That failed.
Well played.
Damn it. Sorry, dude. I completely missed that one.
Yeah, so that went all right.
So let's be clear here. You got in on Cummies, Cum Rockets. Very early in the piece, you identified a trend. You messaged the team here at Equity Mates and said, I'm in, and subsequently it shot up a few %. What have been your major lessons from that? Can you share?
Yeah, so so one of the interesting aspects of Sea Rocket is they have a transaction tax. So it's meant to be a deflationary token, meaning that the supply is constantly decreasing. So if you buy or sell cummies, 2.5% of all cummies which you sold or bought are redistributed to existing holders, and then 2.5% are burnt. So when I sold my cummies, I lost 5% instantly. And because it was such a small market cap, there was a lack of depth. So the price at which I actually sold dropped too. And the lesson I got from that is let your winners run.
Nice. Did you?
I'm feeling there's way too much due diligence going on from the Specky McGee hotline today. What's happening?
Yeah, sorry. I was thinking about that. I think I've got a really easy job here because the idea is the less due DD I do, the better. So I think
hold on. Let's finish by talking about the crypto winners, because you did well on Cum Rocket. Can't believe
Yeah.
that you did well on that, to be honest. But you've also been messaging us relentlessly about Banano, because you came here and you pitched it on the Specky hotline, and you've obviously done well on that as well.
Well, do you know what the funny thing about Banano is? I was reading some analysis from Harry Belafonte about Banano, and this is what he had to say.
Oh my god.
Damn, son, where'd you find this?
What the actual?
What are you on?
Anyway, there it is from.
Was that even worth doing?
No. There's our hot take from Specky.
I was
think he's
hoping we would get a Specky out of that.
So was I, but I think he was just more interested in playing his remix for Banano. But
We're gonna have to do sit down and have a chat with Specky.
we are. But look, good to hear from Specky again, and I'm sure next time he's going to come in with no DD, with an actual Specky. So Ren, let's close out with your stock for the next 30 years. Have you had to think about it?
Yeah. So despite Andrew Brown's comment about this being the obvious choice, this, as soon as you said it, and I started thinking about. A lot of these companies, 30 years is a long time. It's rare that you find a company that can continue to grow and continue to innovate for 30 years. And I think if you were like, all right, well, probabilistically, what's the company most likely to be able to do that? I would be picking the company that is leading the world in artificial intelligence, has the most engineers per square foot, have the most PhDs per square foot, have incredibly strong cash cow businesses that have growth but can fund other ventures. And there's really only one name that fits that bill, and that's Alphabet.
Yes.
And I think if you look at Alphabet and you look at the risk in the short term, the biggest thing is that they'll get broken up. And then the way that I think about the risk of a company being broken up, like Alphabet, obviously this isn't a standard thing for companies to get broken up, but I think about Standard Oil. Standard Oil was this monopoly that just owned the oil business in the early 1900s. The US government broke it up, and out of that came 7 of the major oil producers, many of which that we know today. And I think for me, if you look at Alphabet and you think about if it got broken up into its constituent parts, there may, like, a lot of these businesses will continue running. Some of them may even get more valuable. Like YouTube split out of Alphabet, being able to create its own strategy, run its own course, really compete in the market that it's in, potentially is able to do things that it can't do as part of a conglomerate. And for me, then all the other bets that it's making, like I think people are really sleeping on how far ahead Alphabet is in self-driving cars. The fact that there is an Uber-like service in Phoenix, Arizona, where you can pull out your phone and order a self-driving car to take you from A to B with no test driver in the car, I don't understand how that's not getting more coverage. And obviously there are things about that it's like, you know, it's not scalable in the way that it's being done there. Like but all that aside, it is amazing what it's doing. So for me, it's Alphabet.
Nice. All right, let's close out stock of the year.
You're winning.
Oh, really?
Roblox is up about 8% from its IPO. Well, the price that it listed at, the price that it hit the market at, and Tencent's up about 5% for the year.
Wow, so we are neck and neck.
Yeah, Tencent has come off a lot since its 2021 highs. A lot of the year still to run, though.
Yes, a lot of the year still to run. Ren, to close out, big episode here, a lot to cover. Overnight, the US, we're recording this on the 13th of March. Overnight, the US came out with some inflation figures, and there's no doubt that it's peaked faster than expected, and that's having an impact on the stock market.
Yeah, so I don't want to spend long on this. Maybe we can do another episode on it, but I think we have to nod to it, given it will be the front of mind for a lot of people. So obviously tech stocks have been sold off a little bit recently on inflation fears, a lot of those high growth stocks. So that's definitely something to keep an eye on and be aware of if you're making new investment decisions, just this inflation story. The short-term effect of this will likely be interest rates. If inflation keeps running beyond what the US Federal Reserve wants to see it run at, you would expect interest rates to go up, and that you would expect to be a little bit of a curve on growth stocks as well. So that's something to keep in mind. But I think the final thing is just think longer term about if we keep seeing inflation or even if we see stagflation where there's inflation without economic growth, just think about the US dollar and think about what that means. And, if the US dollar gets materially weaker against other currencies, think about what businesses will benefit, think about what businesses will suffer. The fact that we're investing outside the US, if you're listening in anywhere really, if you're listening in the UK, New Zealand, Australia, India, Europe, we've all enjoyed the US run, and the US dollar has been the reserve currency of the world for our lifetime. I'm not saying that it's going to stop, but I'm saying just be aware of the risks if this inflation story doesn't go away or can't be curbed, and what that means. You might be looking at US exporters that get paid in foreign currency, or you might be looking at, you might be underweighting companies that are US companies that make revenue domestically, or foreign companies that make their revenue in US dollars, or just things like that. Just start thinking about what it means for currency, what it means for interest rates, because this is going to be the story.
Yeah, big time.
And it's starting, and we've been talking about it a little bit, but it's the story.
Yeah.
Yeah.
Keep an eye on it. I've been thinking pretty hard about it, and it's an interesting one in terms of thinking about rebalancing, but then you got to think long term as well.
You got to think long term, and that's an important call out. That everything we're talking about here isn't likely to be the drag on a 30-year portfolio, 40-year portfolio, but it's just like there may be some short term pain. Nice
one. Well, plenty of stuff that we've covered in that episode. We will have to leave it there, Ren. Good to be 30, feeling great.
Yeah.
Hopefully there was a bunch of stocks in there that people can go away and have a bit of a closer look at. But always good to chat stocks, and we'll pick it up next week.
Sounds good.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander people today.